Welcome to Second Take, the show that focuses on the issues behind the news. Diversified mining giant Vale has announced major production declines in the first quarter of this year. The mining giant also has a direct presence in 5 African countries and has teamed up with South Africa's African Rainbow Minerals to explore and develop more in Africa. Mining Weekly senior contributing editor Keith Campbell is with me in the studio today to tell us more. Keith, who is Vale?
Vale is a Brazilian diversified mining company, probably the second biggest diversified miner in the world today. In 2001, they ranked 6th. They have been shooting up the rankings of major mining companies quite rapidly. They produce a wide range of products, metals and minerals. They're most famous for iron ore and pellets, but they also produce copper, nickel, coal, potash, and a wide range of other products, including byproducts from nickel like cobalt, platinum, palladium, gold, silver. Very diversified in their total output these days.
Now, they've mentioned that they are reducing their output but still expanding in some areas. What is the story there?
They're reducing output to meet the short-term problems caused by the global economic recession. Their markets have declined sharply. Steel production, for example, in North America in the first quarter of this year was down 52% on the same quarter last year. In Europe, it was down by nearly 44%. In Asia, much lower reduction by just under 9%. But Europe, North America, and South America together account for nearly half of Vale's iron ore market. So they've had to cut back production quite severely to meet the downturn in the market. The iron ore production for the first quarter of this year was down by nearly 26% in comparison to the last quarter of last year. And we find other decreases. The pellet production was down by a whopping almost 70%. Manganese and ferroalloys by 77%. Other metals by smaller amounts, nickel by 11%, copper just over 10%. This is all because of the way the global economy has come juddering, not to a halt, but almost to a halt. However, they see the long-term future remaining bright, that the Asian economies will pick up, China will continue to grow, India will continue to grow, other native Brazil will continue to grow, and that growth will return in 2-3 years to North America, to Europe, and so on. So they want to position themselves to take advantage of the return to growth in the global economy.
Do you think they'll still be as committed to expansion within Africa?
Their commitment to expansion within Africa is growing every year. They have a big project in Mozambique, the Moatize coal project, which, when it comes in production in a couple of years, by which time the recession should be well on its way to recovery, will have an annual production capacity of some 40 million tons a year of coal. They entered into a joint venture with South Africa's own African Rainbow Minerals. ARM had a subsidiary called Teal, an exploration and development company, active in countries like Zambia, the Democratic Republic of Congo, Mozambique, Namibia, mainly in copper and cobalt projects, but in Namibia in gold. And ARM and Vale have done a deal whereby Teal becomes a 50-50 joint venture between these two companies. It will be renamed. We don't know what the new name is yet.
Why does Vale appear to be better able to ride out the recession than other companies?
Well, at a fundamental level, good management. They have been blessed with excellent management. Vale and BHP Billiton are the two big mining companies that are riding out the storm the best, in the best position to take advantage of it. Vale has, as of the last day of December, Vale had something like $12.6 billion in the bank, plus credit lines worth another $10 billion. So they've got lots of money. Their debt burden was about just under $18.25 billion, with an average maturity of 9.28 years. and an average interest rate of 5.38%. So financially, they're in an incredibly strong position, and they have been taking advantage of it. In January, they were able to snap up first-class iron ore assets and potash projects from Rio Tinto, which used to be the number 2 mining company in the world, but is now floundering under a mountain of debt. So that's basically it. Good management has made certain that the financial position is very strong. They are well positioned to take advantage of the opportunities the recession is creating.
Thank you so much for your time, Keith. That's the show for today. Join us again next time as we take an in-depth look into the mining world's premier projects, industries, and business personalities.